We now want to bring in Victoria Fernandez of Crossmark Global Investments. Victoria, good to see you, especially on a day like this. We got to start with this move in oil. Huge downside move when it comes to oil. We see the major indexes moving higher. What is your take? You're saying this is a headline-driven market. It was headlines. They moved us into the green when it comes to the S&P, the Dow, and the NASDAQ.
Yeah, I think that's exactly it, Frank. I mean, it was headline-driven and concern around the price of oil when we heard that the Strait was going to be closed. We saw what happened there, and especially last night, overnight, looking at what the price of oil did and how that drove the S&P down below that December low. We were getting to the point where we were going to have to be concerned about that 200-day moving average. But I think another important component of this is look what it did to bond yields. We were up last night over 420, so almost to the top of that 4 to 4.25 range that we have been in for so many months. And now we're back down. We were below 410 a moment ago. So really that move down in yields is telling us, one, I think there's less inflation pressure people are expecting because of the drop in oil. And then obviously lower yields is helping certain components of the equity market. We've seen semis actually do really well this afternoon and pick up. Some of that probably has to do with yields coming down as well.
Now, Victoria, something else you were watching is what you say is a rotation away from tech. But as I look at the markets recover today, it's all about tech. I'm seeing NVIDIA as the biggest point gainer on the S&P, followed by Broadcom, followed by Alphabet, followed by Apple. I could just keep going with tech names down the line. What does that say about investor sentiment that when we do see a moment for a potential recovery, people flood back into tech?
They really do. It's a very quick move. So all of that concern that we've had over the last couple of weeks, the Citrini research report, all of the issues around AI and CapEx, it almost just disappeared. And people went right back in. So they're looking for where can they go for growth? Where is that component going to be if they think that the larger growth story might start to slow down? If the global economy slows down a little bit because of the issues that we've seen in the Middle East? If so, I think they're looking at some of these tech names and saying, but wait, this is where we can go in. And if we have yields coming down, that's actually positive for these tech names. So there's a couple reasons I think people are looking at tech and saying maybe it's worth going back in with valuations having come down as much as they have.
Okay, with the headlines we have and the information we have right now, which is the president says he believes that we're close to this war ending, and also there's plans potentially to release petroleum reserves. You said it was a high-risk bull market. Is it still a high-risk bull market? Is it still a bull market?
I do think it's still a high-risk bull market. When we look at what happened before strike started a little over a week ago, you were looking at economy that potentially you could see that bull market continue to run because CapEx was good, productivity was good, earnings were good. That got disrupted for a little bit of time here. If this turns out to be almost over, which again, these relative terms make me a little bit nervous, but if we're close to having it over, I think investors in the market look back to where we were before those strikes started and pick up there saying, look, ISMs were doing better. Investors were part of that rotation and broadening out. Investment grade spreads were holding their own. There's some elements there that tell you you could still have a bull market, but there's still a lot of questions as to how this plays out. So it is still high risk.
All right, I know you don't have a crystal ball, but we are seeing yields go down, oil prices go down, the VIX go down quite significantly. Where do you put money to work right now if this trend continues with the idea that investors believe the war is going to come to an end?
Yeah, so we haven't changed our outlook over the 6 to 12-month horizon with what we're doing in our portfolios. I think you continue to look at those sectors that over the past few months have been in those uptrends. Energy was in an uptrend before the strikes happened. I think it continues to do that afterwards. You were seeing some promising moves out of healthcare, industrials. I think you continue to put money to work in these areas. Staples have gotten a little oversold or overbought at this point in time, so I wouldn't chase those. But look at those areas where you're seeing uptrends, and that's where you're going to put money.